How many shares of the VTI ETF would you need to be able to retire by the year 2030? In this video, we're going to break it down by looking at two different scenarios. A lean retirement where you have just enough to get by, but enough to stop working, and then a luxury retirement where you can have the best of everything and an extremely comfortable retirement. So let's get right into it. Now, for starters, if you've never heard of VTI, it is the Vanguard Total Stock Market ETF. Vanguard is one of the largest ETF managers in the world, and VTI is an exchange traded fund or ETF that tracks the entire US stock market, from small companies all the way up to the largest household names. Now, the current price of a VTI shares is around $216, and if we zoom out to the all-time chart, you can see that since inception in 2001, this thing has been steadily climbing upward. The expense ratio for this ETF is very, very low at 0.03%. So that's pretty much as low as you will find expense ratios for any ETF, and it's much, much lower than expenses on managed funds like mutual funds. And when you buy one single share of the VTI ETF, what you're getting is exposure to over 3,800 companies. You're getting fractional ownership in all of the companies that are held within this ETF. And these companies cover pretty much every major industry in the US because it is a total market ETF. But of course, if we look at some of the largest holdings in the ETF, you're going to see a lot of familiar names like Apple, Microsoft, Amazon, etc. And finally, when we look at the average returns of this ETF, and this is what's going to catapult us into understanding how many shares we would need to retire by 2030, but the average returns since inception have been just over 7.5%, although over the last 10 years and over the last 5 years, it has exceeded 10% per year on average. So now that we have a better understanding of exactly what this ETF is, how many shares would you need to be able to retire by the year 2030? Well, now we need to understand how much money we would need, and this is where we're talking about the lean and the luxury retirement scenario. Now, in the lean retirement scenario, I'm putting the target at $1.5 million. And where I'm getting that is by taking the average household living expenses in the US, adjusting them for inflation to the year 2030, and then annualizing it, and also factoring a perpetual growth rate of an investment, even if you rotate it out of VTI and into something a little bit more stable and secure, like a much more balanced portfolio that's not only equities. And I've even factored in an additional 15% contingency to account for any unforeseen expenses that might occur in your retirement. So once we factor in all of these numbers, I believe that $1.5 million is a reasonable target for a lean type of retirement, where you're definitely going to be able to quit your job and live for 30 years in retirement without actually having to work, but you probably won't be living in the lap of luxury. And so for that luxury retirement scenario, what I'm doing is just multiplying the lean retirement target by 3. So 4.5 million instead of 1.5 million. And I honestly believe that with $4.5 million, you would be able to comfortably live in retirement pretty much anywhere in the world. And in either of these scenarios, if you moved somewhere where the cost of living is lower, maybe somewhere nice and warm where you can live by the beach, well, then you could make these targets stretch even further and live like royalty. All right, so with that out of the way, how many actual shares of the VTI ETF would you need to be able to actually retire by 2030? Well, these are the 3 different scenarios I'm using: the bear case, the base case, and the bull case. Now, for the bear case, I'm using a 5% per year growth over the next 7 years or so. And remember, if we go back over here to the VTI investor page, you can see that the average return since inception has been over 7.5%. So to use a 5% per year growth on average for the next 7 years is an extremely conservative target. Now, for the base case, I'm just using that 7.5% figure, which has been pretty much the average annual returns of this ETF since inception. And then finally, for the bull case scenario, I'm using a figure of 10%, which, as you'll recall, is what the ETF has been returning over the last 5 and 10-year periods, although it would be a little bit higher than the actual total historical average. But still, 10% per year would be a very solid bull case scenario. So if we're working with these 3 different scenarios, 5% growth, 7.5% growth, and 10% growth, if we go back to our spreadsheet over here, you can see that in the bear case for the lean retirement scenario, the price of VTI by 2030 would be around $304. And if that were the case, then you would need about 4,915 shares to be able to actually retire in the lean retirement scenario. And at today's prices of about $216 per share, that means that you would need over $1 million today to purchase those 4,900 shares. So obviously that's a lot of money. And if you're aiming for the luxury retirement scenario, then in the bear case, you would need 14,796 shares, which at today's prices would cost you just about $3.2 million. Now, obviously these are pretty large numbers, and if you had anywhere near this amount of money already today, you'd be pretty close to retirement. So let's take a look at the base case and the bull case because it gets a little bit more realistic. Now, in the base case scenario of 7.5% per year growth, the VTI price by 2030 would be about $360, and the number of shares you would need is 4,169, which would cost you today in the lean scenario $901,000. Now, in the luxury retirement scenario, you would need 12,550 shares, which would cost about $2.7 million today. But if we want to be optimistic and we believe that the bull case valuation model is the most likely to occur, especially since over the last 5 and 10-year periods, this ETF has returned over that 10% figure, well then in the lean retirement scenario, the price of the ETF would be about $421 per share, and you would need 3,549 shares to retire, which today costs about $767,000. So that's basically a 2x of your money over the next 7 years or so, from 767 to about 1.5 mil. Now, in the luxury retirement scenario, with the same price for the ETF, then you would need 10,683 shares, which would cost you today $2.3 million to acquire. Now, I'm sure you've noticed here that in any of these luxury retirement scenarios, if you can actually manage to accumulate this number of shares in the VTI ETF, then you would already be comfortably able to retire under the lean scenario. Now, which one of these do you think is actually the most realistic? The bear case, the base case, or the bull case? And do you think that even if the bull case scenario came to pass, it would actually be feasible to collect this many shares of VTI before the year 2030? Let me know down in the comments below, and if you enjoyed this video, then you might also like this one right here. Thanks so much for watching, and have a great day.